Will property prices stop crashing in 2025? Hi there, and welcome to the Everyday Investor Podcast. I'm AI, filling in for Darcy, who's driving back from the beach today. Immigration, inflation, interest rates, employment data, supply and demand. Many variables all influence the pressure on property prices to rise or fall. Then we inject the human component. Picture the pendulum swinging between fear and greed. A few years flat, a few straight up, then a few back down. Seldom do you find successful pessimists in the property industry, which makes it all the more difficult to assess the condition of the market. The timing of buying and selling property can significantly impact your financial gains though, so informed decisions outside of the positivity and negativity bias is critical. We see a market that's weathered a significant political, social, and financial storm, which saw values plummet by over 15 to 20% from their peak just 3 years ago. Factor in CPI inflation of another 15% at least, and the picture becomes even starker. That million-dollar dream home from 2025 now represents a mere $700,000 in today's purchasing power. Call it a correction or call it a crash. It's massive, and many are hoping for a rebound, which hasn't yet become obvious. But on the other side, whispers of opportunity begin to stir. Inflation's coming down, we're told. Experts agree that rates will fall too. From a buyer's perspective, conditions couldn't be much better than this. When vendors compete, like when there's more sellers of property than qualified buyers willing to commit, it's a buyer's dream. As soon as interest rates consistently drop below 4.5%, taking on debt becomes more appealing for those who would otherwise rent. The potential return of expats, who may find property prices have risen upon their arrival, could further fuel the market. The political layers adds another dimension of intrigue to this complex tableau, however. There are growing murmurs of discontent among the proponents of the current government. What would happen to property prices if a Labour government returned to power? Lots of questions. Join us in welcoming Sarah Wood, CEO of realestate.co.nz. We'll explore the critical factors shaping our property market here in New Zealand, immigration trends, supply dynamics, and market momentum through clearance rates. Armed with all the hard data and industry expertise, I'm sure the discussion today will leave you more informed if you plan on transacting with property this year. Hope you enjoy.
You are listening in to the Everyday Investor Podcast, and I'm Darcy Ungaro. Business, shares, crypto, property, precious metals, and managed funds. It's not about the tools, though. It's about the dream and how much risk you're willing to take along the way. I'm aiming for a healthy margin above an average result for myself, my family, and the people I work with. If you're an everyday person, then please join me. The Everyday Investor Podcast thanks past, present, and future partners of the show. Special mention to Ungaro & Co. for financial advice, Gorilla Technologies for strategic IT solutions, and Icehouse Ventures for investment into Kiwi tech startups. Check out the show notes, subscribe to the fortnightly newsletter, say hello on the socials, and leave a 5-star review. But most importantly, remember, this isn't advice. If you need that, reach out to me or contact your current financial advisor for input. Thanks for joining me on this one. Let's make a start.
So when he got in, the day following, our traffic jumped out of the US by 123%. So we had this absolute influx of people based out of America looking, whether they are Americans or Kiwis going, actually, that's it, I'm coming home, I'm not sure. We have still seen, while the numbers aren't anywhere near as high, we have still seen our traffic out of the US actually up versus the same time last year.
All right, welcome everybody to the Everyday Investor Podcast. Today I'm catching up with Sarah Wood, CEO of realestate.co.nz. How are you, Sarah?
Great, thank you for having me.
Yeah, thanks for coming on. We have a property industry where there are a lot of participants, both on the sell side and on the buy side, that want things to return to a buoyant market, but there's still some dark clouds on the horizon. And I know that, like with the people that I'm talking with, job security, cost of living, these are all the things that come up. So I just want to pick your brain a little bit and figure out where things are going, just at a really high level. Like if we just talk about the vibe when it comes to property in New Zealand, tell me about that.
So maybe I'll start with just talking about what we're seeing in sort of average asking prices. They look pretty stable, right? And so when people say what's happening with the market, well, the data's saying that it's actually looking pretty stable from a average asking price kind of perspective. And what we are seeing though in terms of demand is, we're seeing what we'd expect in a normal market of users coming in and searching and doing all of those things. We definitely saw in terms of properties coming to market in December, it was a little bit slower. But then now you look into January, and the listings are coming through, properties coming to market as you'd expect. So it feels really stable. Yes, there is, what's going to happen with the OCR rate and change in February, and there's a whole lot of historical things that have happened over the last few years that we can talk about that make it quite an interesting story. But at the moment, it feels very stable in that respect.
Stable or business as usual?
It's business as usual.
Okay. Yep. So plenty of people looking to buy, plenty of people willing to sell. Going back to the average asking price, obviously people can ask whatever they want and it doesn't really mean anything, but it does correlate, doesn't it, to what the property does sell for? Is that a fair assumption?
Yeah, there is depending on what market you're in, there is a correlation. Certainly there, average asking prices might sit above sold prices, but we have seen in boom markets that has switched over. So in the peak of COVID, that changed. So, we saw that sort of metric change, but that's also driven by a lot of auctions going to market as well.
Okay. Yeah, because I think it was sometime like this time last year, perhaps, where the average asking price, correct me if I'm wrong, was actually at its recent peak, right? And it's been dropping since then. So is it fair to say that sometimes it kind of is a harbinger of maybe peak market expectations, but it will soon be disappointed?
So that's when I say to you about the market being stable. We've got 18 months really with average asking price that's moving around, but it's moving around. It's 850,000 nationally. At the peak it was 1 million, but what we've seen is it's bumping around by tens of thousands in terms of movement. So which is it's not sort of statistically not showing a big drop or a big increase. It just looks relatively stable if you look at that average.
Thing that I've heard in almost any market, that volume always goes before price. So if you want to see what's happening in terms of the direction, you have to wait for the volume to happen. So last year, and we kind of just have to guess and be unknown around this year so far, but last year in particular, what does the trend in volume suggest? Was it fairly flat for 2024 in terms of averages?
Yes. So what happened is we had a large amount of properties that came to sale over a period of time, and it built up the total number of homes for sale. So you go back to the peak of COVID times, we had record low levels of listings. Last year we had 15-year high records of total number of listings. So we had the opposite. But that's about properties selling through. That's about market dynamics in certain markets. In terms of properties are selling through, but we were having more properties come to market that were actually selling through, and that sort of leads to that that stock build up. We have starting to see that clear through now. But again, you'd expect that as you come into spring, into summer, where they're more active in terms of property markets as well.
Yeah. Okay. When I kind of think about this, and this might be from a slightly more, I guess, a macro perspective, but when I think about what is driving a house price, what determines how much people are willing to pay for a property, it kind of feels like there's two things going on. Like when home buyers are out there and they're buying property, they're thinking about their lifestyle needs, like kids, proximity to school, proximity to work, things like that. But they're also thinking about the financial implications. Can I afford this? Will it go up in value? Will this be a good stepping stone for something bigger? So in terms of like things like, I don't know, immigration, interest rates, and all that sort of stuff, do you have any kind of comments around where things might go because of either the lifestyle or the financial implications this year?
Yeah, look, it's a really interesting topic. And I think that, what we saw off the back of COVID, when COVID happened, we saw this sort of increased search demand and in some of the regional markets, right? So you see people coming out of main cities in Auckland, like where I live, and we had it in our own offices, right? We allowed this additional flexibility, and we had people that located to Whangarei, Bay of Plenty and someone down outside of Christchurch, because we were now allowing that sort of remote, we moved into remote first, and we've allowed that for sections of our business going forward. So you definitely we've seen a bit of a trend of that. So that happened. And then, and then now we're all back into more of a normal, I guess it feels a bit more of a normal market in that respect. But what we are seeing is that, yeah, absolutely. There was a lot of legislation change last year as well. So we had interest deductibility and the Brightline test changed as well. So you had people that were previously investors of property, or they bought in the boom when, interest rates were 3%, and they were, mum and dad investors, and they took on additional property, and then actually they decided with the interest rates to offload those properties, or certainly look to take them to market. So those impacted properties coming to market as well when all of those changes changed over last year. And so that also brought more properties to market. But yeah, interest rates, interest rates are really, the OCR rate and the impact on interest rates, it's that liquidity, right? Like, how much can someone afford to move? And when you look at demand in the market, it is how many buyers are trying to buy that property, but also actually how many other options do I have? And those things will change how much of a premium or what kind of price somebody can get for their property. So, that last year was quite interesting in that respect, because there were lots of options, and demand, were people entering the market, or were they going, actually, I'm just going to hold off at the moment? It seems uncertain, or there's too much change, or interest rates are high. I think also people often don't realize that, with some banks, you can move your mortgage across at its existing rate. So they're going, oh, well, I'm not going to sell my house and go from, 4% to 8%, so there are all sorts of different factors that come into it. I do think, the unemployment rates were high. There was a lot of commentary around lack of business confidence, and all of those things will stop people coming to market. And people come to market to buy or to sell for a whole range of reasons, but when you've got more uncertainty, maybe the next generation coming through are going, actually, I'm just going to hold off making that change until I see that market change. First-time buyers are an example of that. And when you see the OCR coming down, you start to hear more talk about first-time buyers re-entering the market, because it feels more certain.
Mm-hmm. New Zealand is relatively small too, so it is kind of possible to describe the property market in New Zealand as one sort of homogenous beast. Obviously, when you look really closely, you can see that it is not at all. And there's a lot of different drivers for different areas to go up or down. But when you think about other countries like Australia, Canada, the US, it's a very massive market. And probably those lifestyle or the local drivers are quite influential. And the interest rate driver maybe is not as influential, relatively speaking. But
Yes.
Going back to what you were saying with the immigration patterns, I remember that period as well. Obviously, it wasn't that long ago, but it was quite amazing just how things shifted to an online world, how people were just doing business online, and then instantly, without even realizing it, it was like location just didn't matter anymore. And I know that was probably supercharging a trend that was already happening, where people were kind of cashing their chips in the big city here in New Zealand, Auckland, and moving to some of the satellite cities. And more recently, we've probably seen that reverse a little bit. Correct me if I'm wrong, but like areas like the Bay of Plenty, Tauranga, are you seeing the price reductions happen in these smaller cities at a faster rate than what's happening in, say, Auckland?
It's so varied, right? Because each city has its kind of own little climate of what's happening. Because you look at Queenstown, and it's sort of unaffected by everything.
Yeah.
It just keeps going, because you've got international buyers that are coming in there. People are using it as a secondary home. You've got change in that market where people were moving from properties being short-term rentals through Airbnb into longer-term rentals. So that sort of changes the dynamic. You'll have investors coming, or people that have got a secondary home who have been impacted by the economy or the interest rates that are, that will sell out of those markets. So it sort of really varies. And then you have other markets like Christchurch, right? Like if you look at the 10-year story of Christchurch, its property prices haven't increased in the same way as they have in other markets, because they had an earthquake, they had this sort of post-recovery period, and then they had a lot of supply into that market. And so that actually leveled out the housing prices. But now, you're seeing that change. You're seeing actually more speed in that market than you do across others, just because it's sort of in a different place in its own cycle. But look, interest rates undoubtedly always impact what's happening in the market. And if you look at the long-term average in New Zealand, it's around 4%, right? So you get a sense of, we're quite a bit above that at the moment.
Yeah, which would imply that there's less buying pressure, or there's less ability for buyers to kind of go to that level because it's just more expensive to get that money. And so
It just it restricts how far they'll go. Yeah. Do they want to make that change now? And look, I was talking to someone over the summer period, and they were trying to decide, do they trade in this market? They need a bigger home. They've got 2 kids. They want to move. But, just that they're sitting on the fence. Like, what do we do? Is it the right time? Is it not? What if we sell our home and the market picks up too quickly? It's all of those things. And they're trying to decide what is the best thing to do. And I think it's quite challenging.
yeah, and even when you do have that information, it's still hard because you're in it, and it means something to you, right? And so I think
Yeah.
it's a real estate agent explained it to me once, where it's like sometimes every now and then in New Zealand, it's like somebody just stands on the garden hose and the pressure builds up, nothing's coming out the end, but all of a sudden something happens and it's released, and then it's all on. And it still feels like there is some pressure restricting the flow of transactions. And like you say, a lot of that might be financial pressure because interest rates are still above the long-term average. But yeah, at some stage, things will change. And I know in New Zealand right now, we're probably still really concerned about things like employment security, inflation. Even though we're told that it's coming down, it still feels like it's not coming down. And so people are going to make decisions based on what's right for them. But when the market is booming, that seems to be when everybody else jumps in. And sometimes when the market is flat like this, it's often the best time to act. But if we look at just going back to last year, can you just walk me through the data that describes the period of time that it takes for a property to sell, like weeks on market? And tell me what happened last year with weeks on market.
Yeah, look, so what we saw, the sort of long-term average of what it takes for a property to sell to extend out. So that definitely started to extend out. And then when we hit spring, which is September, October, we saw those time periods start to come down, and they were starting to shorten, which is just an indication of property now selling through. And, we look at it in terms of, if no new homes come to market, how long would it take you to sell your property? And so those numbers contracted down. So I think that was kind of interesting. And then also, just to go back to your other point around what's happening in the market, there's also the fire hose analogy. People are also saying, because the market was slower at times, certainly in the first part of last year, then do you end up with this suspended demand in a way, and will that come through into this year? So obviously hard for us to know, but that's certainly a lot of anecdotal chat that is happening with people within the industry as well around, people can only hold off for so long, and then they actually we just have to move. And so what's the timing of that coming forward? Using my example before, this family have been, honestly, they bought their house to market 18 months ago, didn't get the price they wanted for it. They've been sitting there, but it's too small. And, so it's that suspended demand. They're in demand for a bigger home. What's the timing of their property to come in? So what does that actually look like over time?
Okay, so the time it took for properties to sell decreased, which is an interesting sign, and the housing stock that was available to sell actually increased. Is that correct? Last year?
It increased over the course of last year, and you'll see pockets of New Zealand where that increase was quite strong. So you look at Wellington, for example, really affected by changes in government. Obviously affected by unemployment, all sorts of different factors. But, for example, they were very high in terms of number in terms of total stock, not just new listings to market, but total number of homes for sale. So yes, we were sitting at over 30,000 homes for sale. And, you go back and compare that to the lowest in COVID, which was around 12,500. Like, it's quite a different in terms of total stock. But that is, as days on market starts to decrease, that stock's starting to sell through. New stock is coming to market in the same way that it always would. So the number of new listings we're getting is what we would expect to get, but it will just take time for that backlog to clear as well.
So the new listings hit a 17-year record low. So the new stuff that comes on board dropped nearly 60% from November and December. And December is like normally really quiet, but this was exceptionally quiet. So what do you think is going on here?
December's really interesting to me. I think sometimes they're really high, sometimes they're low. It depends on what's happening in the economy and happening in New Zealand across that year as to what happens in December. My personal view, when the people got to December this year, that actually sort of had enough. And they were like, actually, I'm going to push that out to January. And we're seeing that in terms of new listings. So I just think it's more of a sense of where New Zealand was at. It was a pretty tough year last year. And I think that was reflected in the December numbers.
Time will tell, right, this year. But on balance, I still kind of feel like what I've been seeing indicates that, yeah, we're just in another year so far of a good time to buy. And maybe it will get better, but the time is going to shrink. Like the opportunity, the window to get in will shrink at some stage. And okay, that's it. We're off again, right? And sometimes it'll happen so fast that people just get whiplash going, what just happened here? But it does feel like there is always going to be the potential of a supply shortage, because when you look at some sets of data like housing consents, it would appear that the housing consents, or the approval to actually build a home, is roughly in line with the housing demand. Like, say, let's just say for argument's sake, it's about 50,000 houses a year, but the actual number of houses being completed is closer to 30,000-ish from what I've seen. So it still kind of feels like there is a supply issue going on, which will haunt us at some stage. Would that be a fair guess?
For me, I think it's a longer term picture. And I also think that when you look at net migration coming into New Zealand, what immigrants are looking for is potentially different types of housing solutions as well to other parts of the population. So is it more apartments? Is it more attached homes? And so all of those things are a factor in how people will live. Obviously, we've also got a net migration out as well in Australia. And it's interesting to see how those numbers are going to settle. If you talk to pockets of, again, real estate agents in certain markets, and I was talking to someone down in Wellington, and I talked to somebody out in West Auckland, and they were saying, they were getting a lot of homes coming to market of, Kiwis that were moving to Australia for those sort of changes. So it will be interesting to see how that all kind of balances out over time.
Okay, so if we think about last year and we consider maybe the trends this year as it relates to New Zealanders leaving to go to Australia or another country, and then we think about immigration, how immigration settings are often tweaked to goose the economy, I guess. The types of people coming in, and by type, we're going to leave that pretty open, and the types of people leaving are different, in my view, in that the types of people coming in might not be able to afford the same dollar value to buy a home that the people that are leaving are needing to sell. What can you tell me about any sort of patterns in this area at all that you guys see?
Yeah, I mean, what I'd say is I think there's a massive range, right? So, I know of 27-year-old, 28-year-olds that are leaving and moving to Sydney. Equally, I had a friend that moved to Melbourne last week for an executive job. And so that house range is different. But what we are seeing or hearing, certainly anecdotally in certain parts of New Zealand, so for example, a top agent in West Auckland was talking about, the amount of homes that they're selling, or people saying, I'm actually moving to Australia. Same thing in Lower Hutt and Wellington. So there's sort of pockets of it around where people are looking for a change in that lifestyle element. But I think what's interesting as well, when you look at, the types of homes that we're building in New Zealand, 60% of the housing stock sits at that 800,000 and below value. And, we are the homes that are being built en masse is sort of sitting, a lot of it is under that range. So I do think there's lots of options for everybody. And, certainly the change over time in New Zealand in terms of the way that we're building. So more apartment complexes, different types of, attached home options, like those things were kind of pretty unheard of 20 years ago. So I do think there's a different mix of housing type as well that helps suit different budget levels.
If you were in the market to buy a home and you were a young family who was taking their next step, you might be actually buying a home from somebody who is selling because they're moving to Australia, right? And
Correct.
just thinking about that, aggregating that story out a little bit more, maybe that means that the price appreciation, if there is some this year, could be a little bit muted on the plus 800, like 800 and beyond. And maybe the price pressure or the activity, I guess, will probably happen sub 800, where there's probably an increase in supply that's happening. But that's also the area that maybe newer immigrants would probably target that. Would that be fair?
I think we need more data to see how it's going to play out. But certainly, those that are moving to Australia permanently, there are capital gains tax implications for homes that they sell in New Zealand, and that is part of it. Someone that I know is moving, they've got a holiday home, and so, what's the timing of those types of things if you're making a move that's permanent? Yeah, it'll be interesting to see how that changes. But again, also seeing what skill base that comes into New Zealand as well. What I would say as well is that, when going back to the original comment at the start of the podcast around it being a relatively stable market. Now, I personally would rather buy and sell in a stable market because I have more idea about what I'm going to get for the home that I'm selling. And at the same time, I've got some sort of a surety around being able to estimate what a property is going for on the other side of it. When you're trying to buy in a market with high growth, it's really, the increments are jumping and your perception of what something is, has to adjust in that same time period. And I just tell from experience when we were buying in a really hot market. So that, if you're a first time buyer that's upgrading for a family home, like it's actually timing wise, I think there's a lot to be said for the market that we're in, and there's a lot of homes for sale. So there's lots of selection.
Oh yeah, totally. And I think, if you could upgrade in a downward market, that's probably better, especially if you're increasing the size of your home and the value of the home. Makes sense because they're giving away a bigger discount than what you're giving away. But yes, like whatever tailwind you can get, take it, right? Because it's such a hard game to play. So as we come in for a landing, Sarah, the general sort of message out there that has been out there for like 10, 20 years at least is that, hey, if you buy a home, it'll probably double in value every 10 years. And obviously there's exceptions to the rule, but for the last 40 to 50 years, that's been true. And it means that it's a growth rate of approximately 7.2%. Obviously that's just nominal. It's not taking into consideration inflation and all that sort of stuff. But do you feel like we're going to get to a place again in 10 years time where we're saying again that property values double every 10 years and the, say, $800,000 price today is going to be 1.6 in a decade's time? Is that realistic?
I think the next 10 years is going to be really interesting, right? Because we've actually come off a really big high. So we're at average asking price of $1 million and we're now down to 850. So that's actually going to affect that next 10-year story, depending on how you're cutting the data and where the data starts and stops. And I also think it varies, right? So you can look at it at a suburb level and you'll get that 10-year change, or certainly looking historically. In some regions you have that, in other regions you don't. So at Total New Zealand, that was certainly the overall story. When we looked at the 10 years of data, there were some challenges in that, or differences in that, and that was the Canterbury region. Post the elections, it just wasn't getting that kind of growth. It was flatter in the first part of that 10 years, and then it sort of accelerated at the back end. It's going to be really interesting going forward. So the question is, what is the interest rates going to be? What legislative changes will come into New Zealand that could affect that? Because there is a lot of things that will affect that number, to see how that changes. So I don't want to crystal ball it. I just say it's going to be really interesting to see it. The other thing I think we've got to realize as well is, when you look back historically, New Zealanders were investing in their homes as their future retirement fund. And, that some of that thinking's changed, right? Like KiwiSaver wasn't around 40 years ago, and neither was Sharesies. So, where people are putting their money and how they're seeing that has changed. And that could also affect those overall numbers in time. And again, the increase has been driven off demand and supply. And so, what is our 10-year supply story going to look like? And then what's the flow and effect to demand and prices? So, there's a lot of factors.
There is a lot of factors. We have an official cash rate announcement coming up soon at the time of release, and that will be massive. You touched on legislative changes, which is obviously linked to politics. And so if we see performance coming out of our politicians at the moment, which would indicate that they might not get back in power at the next election, I'm guessing a lot of people are going to be starting to get more concerned about what impact that will have to house prices. But then I kind of also think about the overall financial system in New Zealand and just how dependent business and just lifestyle is on rising property values, because that really is the base layer of what supports the economy. And so I know that structurally the show must go on, and property prices growing at 7.2% on average seems to kind of be needed in a way to have economic stability. So like, I know in the long term, it still feels really solid, but I agree, like there is this growing temptation, I guess, to invest in other things, which I think is kind of healthy, because going back to the lifestyle and the financial component in a price of a property, it kind of feels more reasonable that a property should be a dwelling and not an investment vehicle. And I know a lot of people are starting to think like that. Like I can download a digital wallet and buy Bitcoin probably within 10 minutes. Whereas it will take one heck of a process to go through AML, set up bank accounts, apply for a mortgage, buy a home. And so like things are changing so fast. It'll be really, really interesting just to see what impact that has. And if, as we finish up, Sarah, what would be some of your parting words of wisdom to buyers out there right now who know they need to buy at some stage and they're wondering whether this is the year? Is this the year to buy?
What I would say is your decision around purchasing or buying and selling in a market will be so dependent on what your personal circumstances are. But what I will say is there is so much data available, and to really, really do your research on what that looks like, to really understand what's happening in the market that you are buying in, and also with homes that are similar to what you're buying and selling or looking to buy, right? So it's getting really, really clear on sort of what's happening on that dynamic of that's similar to what you're looking at to give you the best sense. Like on our site, for example, we have a market insight section. You can pull it up by suburb, and you can see what is the average asking price, what's the sold price, what's the difference between those two. You can look at it on a 1 year, on a 10-year average. You can see recent sales. There is so much information that's powered by the Real Estate Institute of New Zealand, so it's legitimate data. Find a trusted real estate agent. Try and understand as much as you can around what's happening in those markets. And that would be my best advice. Like there is, I think even now versus 5 years ago, that data is available. It wasn't easily available when I was buying and selling 8 years ago. I couldn't get that sort of level of data that I would, that I want now, and is available now. So yeah, that would be me. Do your research. There's plenty around that will help you get a sense of what's happening to make those good decisions. But we have really solid reports. It's also on our site. You can access it. It'll give you a summary by region, and there's plenty of information. And if you're really stuck and you can't find our site, just call our 0800 number. Our team will help you find it.
Awesome. Thank you so much, Sarah. I hope you enjoy the rest of your week.
Thank you.
Cheers.
Thanks for joining me today on the Everyday Investor Podcast. Hope you enjoyed that, and if you did, please share me around. For the odd giveaway, invite, and sneak peek, make sure that you've subscribed to the fortnightly newsletter. The link is in the show notes, as well as special referral codes from previous guests on the show. Remember, our show partners Ungaro & Co., Gorilla Technologies, and Icehouse Ventures. Lastly, a final reminder, please remember this isn't financial advice. If you need that, reach out to me or your current financial advisor. Thanks again for joining me on this one, and we'll catch you next week.